SpaceX went public this morning. Today, June 12, 2026, is day one of SPCX trading on the Nasdaq, and it is already being called the largest IPO in the history of financial markets. If you have a 401k, a brokerage account, or even just 5 minutes to understand what is happening today, this video is for you. SpaceX raised $75 billion in this offering. That is not a typo. $75 billion. Saudi Aramco's 2019 IPO, previously the biggest in history, raised $29.4 billion. SpaceX just did 2.5 times that in one morning. The company priced its shares at $135 last night. At that price, SpaceX carries a total market cap of approximately $1.77 trillion. That makes it, on its very first day of trading, the 7th most valuable company in the United States. Bigger than Tesla, bigger than Berkshire Hathaway, bigger than Visa, JP Morgan, and Walmart. But here is what most people are missing in all the excitement. This IPO has 3 very different stories happening at once. There is the story of what SpaceX actually does and how it makes money. There is the story of the risks, and there are real ones. And there is the story of what this means for your portfolio, whether you bought shares or not. We're going to walk through all 3. Let's start with the business. SpaceX reported $18.7 billion in revenue for fiscal year 2025, up 33% from the year before. That kind of growth rate at that kind of revenue scale is genuinely rare. For context, Amazon grew revenue at 11% last year. SpaceX is growing faster than Amazon. The engine behind that growth is Starlink. SpaceX's satellite internet service now has 10 million subscribers across 164 countries. That is roughly double what it had a year ago. Starlink alone generates about $10 billion in annual recurring revenue, and it accounts for roughly 60% of SpaceX's total sales. The rocket launch business, the part most people think of when they hear SpaceX, makes up about 22% of revenue. And SpaceX controls roughly 90% of the entire commercial launch market worldwide. Its closest competitor, United Launch Alliance, is a distant second. There's essentially no competition in this space right now. Now here comes the part the hype machine is not putting in the headline. Despite $18.7 billion in revenue, SpaceX posted a net loss of $4.94 billion in 2025. The year before it was profitable, $791 million in net income. So what happened? The company spent $12.7 billion building AI data centers for xAI, Elon Musk's artificial intelligence company, more than it spent on rockets or satellites. That is a critical detail for any investor. SpaceX is not just a rocket company or a satellite company anymore. A huge chunk of its capital spending is flowing into Musk's AI venture. Whether you believe that creates future value or dilutes SpaceX's focus is exactly the kind of question you need to answer before putting money in. On the valuation, the numbers are eye-watering. At $1.77 trillion, SPCX trades at approximately 94 times its trailing annual sales. For comparison, Palantir currently holds the highest price-to-sales ratio in the S&P 500 at around 67 times. SpaceX is being priced at a premium above even the most aggressively valued tech stocks in the market today. Morningstar's chief equity strategist has already called the valuation, quote, extremely speculative, and told investors to sit this one out and wait for a more attractive entry point. On the other side, Wedbush's Dan Ives is bullish and compares SpaceX's trajectory to Tesla's run, which gained 90% over 5 years from its IPO price. Both of those analysts have track records. Both views deserve to be heard. So who actually got shares? This is where today's IPO is genuinely historic in a second way. SpaceX reserved about 30% of shares for retail investors, meaning everyday people with brokerage accounts. A typical mega IPO gives retail maybe 5 to 10%. This is the largest retail allocation in IPO history. Fidelity, Schwab, Robinhood, and most major brokerages added a dedicated SPCX request feature weeks ago. If you requested shares through your broker, you may have received an allocation this morning. Check your account. If you did not request shares ahead of the IPO, you can buy SPCX on the open market right now like any other stock. Just be aware that first-day IPO prices often swing dramatically. The opening price almost never tells you the long-term story. Now here is the part that affects you even if you're not buying a single share. The Nasdaq implemented a new fast entry rule on May 1st, 2026, designed specifically to attract large private companies going public. Under this rule, if SpaceX's market cap ranks in the top 40 of current Nasdaq 100 members within weeks of listing, it qualifies for inclusion almost immediately. What does that mean in plain English? If SPCX enters the Nasdaq 100, it automatically flows into QQQ, one of the most widely held ETFs in America. And QQQ sits inside millions of 401k plans, target date funds, and index portfolios across the country. You might own SpaceX within weeks without ever making a single trade. This is not unusual. It is how index investing works. When a company is large enough and meets the index criteria, it gets added, and every fund tracking that index buys it automatically. Apple, Microsoft, Nvidia, they all flowed into your index funds the same way. SpaceX could be next, and at 1.77 trillion, the math puts it squarely in Nasdaq 100 range. Let's talk about Elon Musk's stake, because the numbers here are staggering. He retains approximately 42% of SpaceX after the IPO. At the $1.77 trillion valuation, that stake is worth roughly $742 billion. Multiple financial outlets are reporting that today's debut pushes his net worth past $1 trillion, making him, if those numbers hold, the first trillionaire in human history. Musk is also subject to a one-year lockup period on his shares, longer than the standard 180-day lockup most IPO insiders face. That means he cannot sell for a full year. That is worth noting because lockup expirations historically create selling pressure on a stock. Circle June 2027 on your calendar. Now let's get concrete about the bull case. If you're optimistic on SPCX, the argument goes something like this. Starlink is a recurring revenue machine growing at 100% year over year. The launch business has no real competition. Starship, SpaceX's next-generation rocket, has the potential to reduce launch costs by 90%, opening entirely new markets from Mars colonization to point-to-point Earth travel. And the Nasdaq Fast Entry rule creates instant institutional buying pressure. The bear case is equally serious. SpaceX lost nearly $5 billion last year. The AI data center detour raises questions about capital discipline. At 94 times sales, any slowdown in Starlink subscriber growth or any Starship mishap sends the valuation into freefall. And the company is one regulatory headline from the FCC, the FAA, or international governments away from a significant operational disruption. There's also competitive risk that is easy to underestimate. Amazon's Project Kuiper just launched its first full constellation last month. OneWeb is operational. China's Guoang satellite network is expanding rapidly. Starlink has a commanding lead today, but satellite internet is increasingly a commodity market where pricing pressure will intensify. So what should you actually do? First, do not panic buy because of FOMO. IPO day excitement is real and it moves prices. The single worst time to evaluate a stock is on the day it starts trading, when every headline is either maximum hype or maximum fear. History is full of iconic companies that had brutal first years. Amazon fell 90% from its post-IPO high before becoming the company it is today. Second, if you want exposure and you already hold QQQ or a broad Nasdaq index fund, wait. You may get automatic exposure through the index without paying first-day premium prices. Check whether your fund tracks the Nasdaq 100 and monitor the fast entry announcements over the coming weeks. Third, if you want to buy shares directly, position size matters more than the entry price. A speculative, high-growth, high-valuation stock like SPCX should represent a measured slice of your portfolio, not your entire retirement account. Most financial advisors suggest keeping any single speculative position to 5% or less of your total investable assets. Fourth, read the S1. SpaceX filed its full prospectus with the SEC, and it is publicly available. The AI data center spending is in there. The net loss is in there. The XAI connection is in there. The risk factors section alone is 40 pages long. Any analyst who is confidently bullish or bearish without having read it is working from vibes, not data. Here is something worth stepping back to appreciate regardless of whether you ever buy a single share. 25 years ago, SpaceX did not exist. It was founded in 2002. In less than a quarter century, a private company built entirely around the idea of making humanity multiplanetary became the most valuable company ever to go public in a single offering. Whatever your view on the stock, that is genuinely extraordinary. Starlink is real. 10 million people in 164 countries are paying for internet service delivered by satellites that this company designed and built. Rockets that were previously single-use are now landing themselves on drone ships and flying again. These are not projections. They're current operating realities that generate actual revenue today. The debate is not whether SpaceX is an impressive company. It clearly is. The debate is whether $1.77 trillion is the right price for where it is today, and whether the AI detour, the net losses, and the competitive threats justify the premium. That is the only question that matters for an investor. Everything else is noise. One more practical thing to watch in the next 30 days. IPO lockups do not apply to the 30% retail tranche. Those shares are freely tradable from day one. If the stock pops significantly in the first week, profit-taking from retail allocations can create a sharp pullback. This is a pattern seen in nearly every mega IPO. A pullback is not a signal the company is broken. It is just mechanics. Also watch the Nasdaq 100 Fast Entry decision closely. If the index committee announces SPCX qualifies for inclusion, expect a burst of institutional buying. Every fund tracking the index has to buy shares to rebalance. That announcement alone could move the price significantly. It is a known catalyst with a known mechanism. Calendar it. Bottom line for today, SpaceX's IPO is the defining financial event of 2026. It is historic in size, historic in retail access, and historic in the scale of debate it is generating on valuation. Whether you're a buyer, a watcher, or someone who will own it through an index fund without ever clicking a button, you are part of this market moment. Do not let anyone, bull or bear, pressure you into a decision today based on first-day price action. Give yourself the weekend. Read the prospectus. Understand where SPCX would sit in your overall allocation. The stock will still be tradable on Monday and on every trading day after that. Good investing is almost never urgent. And keep watching the fundamentals that actually matter. Starlink subscriber growth each quarter, Starship launch cadence and cost per kilogram numbers, the AI data center capex trajectory, and the path back to profitability. Those 4 data points will tell you far more about SPCX's 5-year future than today's opening price ever could. If this breakdown helped you think more clearly about the biggest IPO of your lifetime, drop a comment below. Are you buying SPCX, watching from the sidelines, or just letting your index funds handle it? And if you're not subscribed yet, hit that button right now. We cover exactly these moments, the real numbers, the real risks, and the real decisions, every single week. See you in the next one.